Now is the time to buy real estate. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at an article from domain.com.au which is telling us that now might just be the time to buy real estate. We seem to be getting a lot of mixed messages from the perma bulls in the property industry, aren't we? One day it's property's going to go gangbusters, it's strong and reliable. Now's the time to buy. Or then it's going to fall, but only 10% or only 20%. I mean, if you lose 20 grand, it'll go back up in a year. It's fine. V-shaped recovery. We'll have to see, guys. We will have to see. So, why now could be the right time to buy a new home, according to experts? And how many of the experts are just real estate agents with a few months training? But we'll keep going. A record number of Australians have been planning to buy a new home before the pandemic hit. New research from one of the world's largest banks has revealed. Nearly 1/3 of those surveyed had been considering upgrading, downsizing, shifting location, or getting into the property market for the first time, according to Rabobank, in what would have provided a massive boost for the economy. The experts advise that if potential purchasers aren't too adversely affected by the pandemic, now could be an excellent time to continue with those plans. But it all comes down to people expecting, a property. Fundamentally, it comes down to your expectations of the economy in the next year. Do you think that when the free money that's being pumped into the economy, when the job seeker or job keeper is ended, do you think we will start to get forced sales? Do you think that will affect the price of property? If so, are you going to hold off to go into that? Or do you think that it will be a recovery, slow and steady, or even just same old for the next few years, or a sharp pickup? So now may be the time to get in and, grab that bargain while you can. I guess it comes down to, what you anticipate. And also, when buying a home, if you're buying a house for you to live in, then that's also a different question as well. If you're in it for the long term, do you really care if you lose that much or if you make that much? If you're not using it as an equity growth to, build your empire from one house to the next house to the next house, it doesn't matter really. What's the point in having equity on your house unless you take advantage of it? And maybe some people are a little worried or have heard all the stories of people going to negative equity and want to avoid it. So prices are falling, at least we're hearing that, and supply is increasing, which creates more opportunities for bargains. As interest rates remain low and dissatisfaction with current homes is rising as a result of prolonged isolation spent in them. Well, that's an interesting point. People are getting frustrated with their homes. Actually, yes. For us, it's very different. We've got an old Queenslander that needs a lot of work, and frankly, it looks quite embarrassing from the outside, but we're slowly fixing it up. I'd rather have a mortgage, which I barely notice, than, a pretty house and paying huge interest on it. But, I've got my little office here, which is the studio at the back of the house. I've got a gymnasium I've set up outside. The kids all have different places to do school and learn and play, so it works quite well for us. One thing is, though, I want to build another room. I'm going to put a little stud wall up and slice off a portion of the nursery to make that into a Nintendo room, so we can have one of the kids playing on Nintendo if they want private. That's the next project. That's the good thing with having these old ramshackled Queenslanders. You can really add, adapt, and change them as you need, much easier than the newer houses. Anyway, back to this article. So, Glenn Whelans of Rabobank said the bank had been conducting its financial health barometer of the country for over a decade. But in the poll we conducted in the first quarter of 2020, we found a record high number of Australians, 29%, citing the intention to buy a new home in the next 2 years, he said. That eclipsed the previous high of 24% in 2016, when house prices went up by 15%. So that was FOMO. Could also be people are getting older, they're starting to settle down. The engine room for much of that confidence, the report found, was Generation Y, with 32% of people of those aged 24 to 37 considering swapping homes or buying one for the first time. Whelan said no one yet knew how the position would have changed with the pandemic crisis and so many losing their jobs. Well, guaranteed, it has changed. And a lot of people in this demographic, in my demographic, oh no, not in my demographic, I'm older than this now. Damn it, I'm older than this. They won't remember the recession. They won't remember the last recession Australia had. Even those at 37, they'd probably still be a little bit too young. It's kind of Rachel's group and Emily's group. They wouldn't remember it as well. Depends on your family circumstances too. This is going to be a tough lesson for some people with what a recession means. We didn't have the JobKeeper back in the recession in the 90s, did we? That's really dulled the impact. But I think there's definitely a lot of people exhibiting really good financial management leading into the pandemic and having a sizable deposit saved, so were aware of what they could afford, said Whelan's head of client expectations at Rabobank. Really, really good financial management. Afterpay is growing faster than ever. People, 10% of our population have only $90 saved. I guess this is just the demonstration of the class divide, perhaps, or those that have financial literacy and those don't. I wonder what you consider a lot. People are now seeing good opportunities in the market and perhaps also feeling FOMO. That's the problem. It's FOMO. We've got other articles where they're writing that a $700,000 house is a bargain or cheap, nearly $1 million. It really is a clown world we're living in. And FOMO, this is something you want to avoid. If you are making a decision based on fear of missing out, that's a problem. And I know, I've done it too. Lots of people have. We're all susceptible to this. With so many people previously ready to pounce on the market with deposits put away and research on what to buy completed, then there's still room for them to act if their financials haven't been derailed by the pandemic, says Nerida Call, Managing Director of Dixon Advisory. Well, yes, but if there's expectations that the economy is going to be hit harder, what are they going to do? She reports of inquiries from people ready to buy, but asking if now is a good time. That all depends on someone's job security, she said. People have to be honest with themselves about their jobs, their industry, and a little bit cautious about making a huge commitment if there is a concern around their jobs. The good thing is now is that it is a buyer's market. So we're starting to hear more of that. And if vendors aren't coming to the party on price, they can walk away as there'll be another property around the corner. A lot of people really want to sell now, whether investors wanting to get out of the market or people under financial pressure themselves. So there are good opportunities. Many buyers can now negotiate with banks for better terms or rates, especially if they've already had a good deposit saved. Call recommends always having 20%, as if the market falls further, worst case scenario being outlined of a 20% fall in price. Buyers don't want to be out of pocket. Okay. I mean, here's the thing, guys. You don't want a 20%. I don't understand. If the market falls 20%, you've lost 20% on your investment. Okay. Here again, we're hearing this now. We're saying, more discussion that there are opportunities, that it's a good time to go in. FOMO. The market may just fall 20%. If you spend, just think about that. 20% on a $500,000 house is $100,000. What's 20% on a $700,000 entry-level house? $140,000, guys. You still got to pay that. How many people would wind up in negative equity if they were in that situation? Or their loan-to-value ratio is 1. They should also consider moving deposit savings to cash to enable them to seize opportunities quickly. Purchasers are definitely now in the hot seat, Cole said, particularly when the eviction memorandum ends. We'll likely see even more property coming onto the market for sale. As long as you do your due diligence, you're the one in control. Justin Dubove of Intelligent Finance agrees that now is a good time to buy. Well, no. When the eviction memorandum ends, that's a good time to buy, not now. Are we getting mixed messages here? and especially to upgrade to a more expensive property. That's it. You've got to keep up with the Joneses, guys. You've got to get that more expensive property. People have spent a lot of time in social isolation in their homes and now realizing the shortcomings of their homes and want to move into something better. I feel sorry for the people that are stuck in little one-bed units or studios. Could you imagine being socially isolated in a studio? Now is a good time to be ready to buy because there's going to be a lot of people coming out onto the market that people need to sell as they've lost jobs or are under financial strain, and be ready to make discounts. But my advice is always to sell before you buy so you don't end up one of those desperate sellers. The Rabobank research points to reassuring signs of pre-pandemic financial health within the community. It found 73% of people said they lived within their means. Okay, that's what they're saying, but is it true? 66% had a long-term financial plan, and 62% regularly reviewed their finances. 8% said they were financially comfortable, up from 2019's 79%. Well, that's good. That could also be the new generations coming up, seeing all the mistakes of previous generations and learning from it. I'm hoping so. I'm hoping this will all be a wake-up call to some people. With perceived demand having been at an all-time high, now it's definitely a great time to take stock and review how circumstances currently are and whether there are opportunities, said Wieland. It's always important to be on the playing field and actively reviewing finances rather than just a spectator wondering when the pandemic will subside. Well, there you go, guys. From this, it's telling me that now one should wait until the memorandum of an evictions disappears. So then there'll be more people forced to sell or have the opportunity to sell. Is now really the good time to buy? As always, let me know your thoughts and opinions in the comments below. Are you looking at buying a house? What strategies are you doing? Are you worried that it'll go down further? Or are you looking at a forever home, so you don't really care? As always, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can use our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can use Gold Pass from the Perth Mint, or buy our merch from HeiseSays blog. And finally, support us via PayPal. Thanks, guys. See you next time. Bye for now.